Hello everybody, welcome to today's video. Let's start today's video with a hypothetical example. Imagine you are earning right now 20,000 rupees in Bangalore, okay? And let's understand how you would break up your 20,000 rupees into different spend categories, okay? You will start off with allocating 6 to 7,000 rupees for your room rent, like if you are sharing with your office colleagues or so. Then you will allocate another 6-7,000 for your food and another 6-7,000 for your, like, let's say movies, entertainment, or any other stuff where you would like to spend. Correct? Now, as your salary increases, what will you do with the remaining amount? Right? You'll probably upgrade to a better place and you'll probably spend a little more on bunch of other things. But there is a huge chunk of money that will start going into savings. Right? Now, what I used to do as an individual was that I used to say that 20,000, all my salary goes into different spend buckets. Now that 20,000, as it increased to 30,000, 40,000, 50,000, I used to say that, okay, now Dad, why don't you go manage the remaining 20,000, remaining 30,000, right? You either put it in a fixed deposit or you go and invest in whatever place is correct. So I forgot that I need to learn about managing money as well. That is one of the most crucial mistakes that I made in my early career. Right? I did not realize that it's important for me to know how to manage my own money. My dad was also a working professional, so he never had any time. So all he did was go open a fixed deposit account and put that money over there. Now, I believe that this had a long-term impact on how I handle my money. But I believe that if you are in your early 20s, if you are just getting started with your careers, please start thinking about, you are upskilling yourself with respect to getting a better job. You are upskilling yourself with respect to getting a better salary and all that stuff. But you also need to upskill yourself so that you save your money in a better way, right? Most important thing you need to know is that, you create your wealth not through your income, but through your savings. Okay, and that is one area where you need to upskill. A few ways in which you can do it. Every single month, make sure that you have a certain percentage of money that goes into your savings income. And that savings income, you can start diversifying between cryptos, you can start diversifying into stocks, mutual funds, small cases, fixed deposits as well, right? You can diversify into 4 to 5 different categories and start understanding where you are getting more returns, right? Again, if you are just getting started with all of these, start with smaller amounts. Don't go and invest all your 10,000 rupees of savings into one single instrument. You might not get the returns that you are looking forward to. So please start small in every instrument. But more importantly for you, in your early 20s, when you are just getting started, it is important for you to learn about that instrument. Instrument being either stocks or instrument being cryptos, right? These are the things that you need to get used to as you grow along in your career. Right? That was one mistake that I committed, and I hope you don't commit that mistake in your early 20s. Now, if you like this video, please do hit on the like button and also subscribe to this channel. Okay. Now, moving into the second financial mistake that I want to talk about, that majority of us commit in our 20s, right? We know we get a certain salary. We spend that certain salary in a few ways. And if we have savings, we'll go and deposit in our savings account. If we have an emergency situation with respect to health or with respect to, let's say, any unfortunate situation that we don't see, what do? We immediately go to our parents and say that, hey dad, hey mom, I need 10,000 rupees. I have this unfortunate accident that I need some funds to cover up for this. So please send that money. That's what I used to do, right? Now, as I grew a little older, I used to manage my own savings. I used to put all of them still in fixed deposits and in different savings instruments. But the problem was that whenever I had an emergency situation, I used to dig into my savings immediately and put it out there, right? But there is a gap in between, right? The savings and the incidents that used to happen. That is, there is a bridge that my employer used to cover me for. That is like your insurance policy. Now, what happened with a lot of my friends in the US was that people don't read the fine prints of what is going to happen in your insurance policy. With respect to one of my friends, typically everybody knows that if you are having a baby in the US, your spend could go up to $40,000. No kidding. the entire hospital expenses could touch up to $40,000 US dollars, which converts to 30 lakh rupees INR, right? That's a lot of money. Majority of it is covered by your insurance, so you don't need to worry about it. But in some cases, the insurance says that, hey, 20% copay, that is, hey, of the 100% of the bill, that is 40 lakhs or 40,000 USD, you are responsible to pay 20% of the bill, that is $8,000, right? That's a lot of money. $8,000 equates to 6 or 7 lakhs, and you need to immediately go and start putting that money to the hospital, right? So that's a difficult situation, and people, if they don't have the habit of reading these fine prints, then they are in a soup, right? One of my friends was like juggling to get that funds arranged in the last minute, and he would not have to go through all these kind of pain points if he would have arranged for that $10,000, $8,000 amount even before that, right? Now, another interesting scenario that I'll say, hey, as you guys know, I moved back from the US to India a couple of years back. So my insurance was always covered by my employer. But when I moved back, I started looking at different insurance providers, and I started reaching out to them to get me a personal health insurance coverage. What happened? I got one, I read through the fine print, and I was done. I got a policy, and it was all smooth sailing. Until 1 year, when I had an incident and I went to a hospital, these guys said that, hey, there is a waiting period for your insurance, right? They literally said there is a waiting period for your insurance policy, so you cannot avail your insurance amount. You cannot go and claim your insurance money. I was like, hey, what is this waiting period? These guys again were, please go back and read your fine print. So if you do not have the habit of reading your fine prints, please do that. If you believe that, hey, your employer will cover for all your expenses, the day you are out of employment, then your personal insurance policy would have a waiting period of at least 2 years. So I had a chat recently with one of the guys from Ditto Insurance. Please go talk with them, clear your doubts about, hey, what is that specific insurance policy that suits you? If you are planning to venture into the startup space, if you are planning to go study abroad, if you are planning to switch jobs, or if you are planning to have kids, in any of these different life-changing circumstances, it is important for you to have your personal insurance, right? For me, it happened when I moved from US to India, and having a conversation with folks from Ditto really helped me understand what the insurance blueprint for my particular scenario is. So please do that, okay? Now, the third financial mistake that I committed in my early 20s is completely depending on one income stream. I was of the opinion that, hey, I will go 9 a.m. to work till midnight, and I will get the salary and I'm super happy. Done. Interestingly, one of my friends asked me that, hey Pawan, you are having some very good expertise in digital marketing. Can you please come over to my startup and give us like 3 to 4 sessions every single month to my team regarding handling digital marketing situations, right? I said, sure, I can do that. And my friend very generously said that, hey, you are committing your active time for this purpose, and I would love for you to come over, help us out, and also get paid in return. I, as a great individual, said that, hey, I don't want to get any money. I will rather do it for free, right? Now, what I did not realize in this entire exercise is that, hey, that single activity, I can do it. But my mindset is still of the opinion that, hey, you already have an income and you don't need to worry about other income streams. But the later I realized when I moved into the startup world is that, hey, having multiple income streams is super important so that you don't stress out because of your primary income stream. Your primary income stream could be your salary, no questions asked. But if you develop 2 or 3 other income streams, such as having an expertise and giving consultations to different companies, talking to or training folks in a small group set up for 500 rupees, 1000 rupees, that kind of stuff will start reducing the stress that you take with respect to your primary job, right? That is one of the best ways. And to be very honest, every single individual that I've hired at Blue Chapter, these guys already have a primary job and they do the work for Blue Chapter as their secondary source of income. So they don't take pressure and they give their best result possible to Blue Chapter. And I'm absolutely grateful for that. So if you are looking for a secondary source of income, if you have interest in, let's say, managing a team, if you have interest in consulting, if you have an interest in, let's say, video editing or any of these things, please do let me know. Okay. Now, these are a few ways in which you can start generating that secondary revenue stream. But the most important aspect is that, hey, you need to start looking out for opportunities. Nobody is going to come to you and say that, hey, there is an opportunity for you to earn money. That's not going to happen. You need to put your foot forward and start looking out for those opportunities. Once you do that, you might start small. You might start with probably 5,000 rupees, 10,000 rupees, but you will start seeing that, hey, the savings that you make out of your secondary revenue sources will double up very, very quickly. Okay. So I would love and encourage each one of you to explore these three things, right? Please go check out insurance, right? What your insurance blueprint is. If you don't have an insurance, it is very important for you to go and buy it, right? Ditto guys are doing a fantastic job. These guys can help you purchase the right insurance for you. Number two, I would recommend you guys to start saving your own money, right? If you are spending 20,000 rupees in 30,000 rupees salary, that's up to you. Right? If you are spending 25,000 rupees in 30,000 rupees salary, again, a lot of personal situations demand that. But whatever you are saving, try to save it through the instruments and learn about these different instruments at the same time. Okay. The third thing, please understand the importance of a secondary revenue stream. Nobody comes to you and says that, hey, Pawan, please take this money and here you help me out. That happens, but not too often. You need to go and explore secondary revenue streams for yourself. All right, guys. I hope this is helpful for you. Please press on the like button if you like this and also subscribe to the channel. Look forward to seeing you again tomorrow. Take care. Bye.